To our panel, the question, Microsoft CEO Steve Ballmer says this earnings report will not affect his company's bid for Yahoo, but could it influence shareholders' decision-making?
Let's ask our Fox panel, including Peter Schiff, author of Crash Proof. We have Jordan Netburn from Axiom Capital Management, Yoron Brook from the Ayn Rand Institute, and Victoria Barrett from Forbes. Victoria, you're out there in California land near Silicon Valley. I'm dying to know if you believe this earnings number, no matter what it is, because obviously Yahoo is throwing everything it's got at this to make sure it beats.
Oh, yeah, that's why you can't look at this number and really say, hey, is this going to happen next quarter or the quarter after that? And if you're a Yahoo shareholder, Microsoft is offering you a really nice premium. Yahoo's current stock price is really in big part thanks to Microsoft. A lot of shareholders are betting that they're going to get $31 a share at least. So, you know what? I see this afternoon as only downside for Yahoo. You know, if they miss their toast, if they beat, you've still got Steve Ballmer saying we're not going to pay more. And they don't have a second strategy. There's no, like, big vision here where Jerry Yang is saying, you know, this is the next direction.
Jordan, expectations, though, are so high because of everything that Liz was saying and Sandra was saying about how you can work the numbers to make it seem as bright as possible, even on a cloudy day. So are expectations so high that unless they beat the numbers by a lot, will the market be disappointed?
I think there's certainly room for disappointment if they don't hit the number, but I think the bigger picture is this deal is just not what we saw 7 years ago in this internet sector. These companies are no longer the bastions of growth they used to be. I think Yahoo...
Even in light of Google's great numbers?
I think Google is the growth name in that sector, and I think that's why Google's had such a meteoric rise. But Yahoo and Microsoft, these are no longer the growth companies they were. And I think Microsoft is giving them a very fair outlook, and I think they're not stupid guys. I mean, Bill Gates is a guy, Ballmer's a guy. These are guys that do their due diligence. And so maybe there's a little bit left if some miraculous surprise comes out of the woodwork. But this is making the XM Sirius satellite deal look like an exciting deal.
Peter, the deal deadline is Friday. If Yahoo turns it down, then Microsoft can go hostile, and they can take it to a proxy battle, which would be very ugly and difficult, and they could even lower their bid, could they not?
I think they'd be foolish to turn it down. You know, this is a good bid. Microsoft's at about 15 or 16 times earnings. Yahoo's at 60 times earnings. You know, it's twice the multiple of Google. Why should Yahoo be valued twice Google? It's a great deal. They should take the money and run. I know they're getting some cash and some stock. And when they get that cash, they should get it out of the dollar as quickly as they can.
Well, and Yoron, actually, Peter's onto something, which is the fact that originally when this offer was made, it was a couple of $1 billion more than it's worth now because Microsoft's share value has come down.
Well, absolutely. I agree with Peter. Yahoo should take this deal. And I don't think expectations are that high. If expectations were high, the stock wouldn't be at 28, it would be at 32. I mean, the expectation would be that Microsoft ups the bid. Microsoft's not going to up the bid, and Yahoo shareholders are going to want this deal. Whether Yahoo management wants the deal or not, that's a different question.
Sandra, Jerry Yang is dying to keep this company either independent or get a higher deal. Is he the CEO to lead them into the future?
Well, that's the big question, is because ever since this offer was put on the table, he's tried everything in sight to try to please the investors, please shareholders out there, and he's pretty much failed at that, to be quite honest with you. And basically it all goes back to, you know, what else can people look for in this report today? One thing that a lot of investors have been or analysts have been talking about is their international sales. If they're able to prove that they've been pretty impressive as far as international ad revenues coming from Asia, that could be a big one for investors to look at today. The other one is just overall market share. The latest numbers here: Google 60%, Yahoo 20%, Microsoft 9% of the share of the market right now. So it's all about getting the ad revenue space out there, and that's going to be a huge one to see if they picked up any more from Google. That would prove their story.
We only have a couple of seconds, but quickly, the consensus in Silicon Valley, is the consensus that this is a deal that Yahoo can't afford to pass up?
Yeah, the consensus is that this deal is done. I mean, Yahoo's problem and Jerry Yang's problem is that he came in a year ago. All he's done on the surface seems it's like layoffs. So that's just been his big value add for a year. There's no plan B. So Microsoft has got to be the next move.
Final word for this panel, but we got a lot more to talk about on Yahoo. It's just about 45 minutes away. We'll see. Moments to go before the closing bell. Oil prices gushing to new highs, but just in the past couple of minutes, interestingly enough, gold has come down in price. Gold is down to $916. It's off just 80 cents. But the interesting thing there is it comes in a day when our own Adam Shapiro got a couple of exclusive interviews with members of the Fed who suggest that perhaps the Fed is going to become a lot tighter in dealing with the dollar, which might mean not as big a rate cut as had been expected.
Yeah, when the Fed cuts rates, that's dollar negative and gold positive often. So any kind of talk like that from people like Richard Fisher is something that is extraordinary for the markets to hear. And Adam Shapiro was the one who got that. And it's fascinating stuff to see that the Fed may be changing its mind about all those rate cuts. Let's get the last ideas from our Fox Business panel as we wait for the closing bell, which is about 6 minutes away. We begin on Wall Street with our very own Tracy Burns. Tracy.
Hi, you guys. Well, of course, oil was the story of the day. Earnings reports, too. Some of them not so great, some of them okay. Alan Valdez made a very interesting point earlier that of the companies that reported, 60% either met or exceeded expectations. This is in line with historical quarters in the past. This is how it's been typically. We are not doing all that bad. Gold stocks were up before. They have pulled back. Of course, the airlines getting hammered today. And you know what, though? It was a much worse earlier when we got news from UAL, the parent of United, that they might have had issues with their debt covenants. The CFO came out and said, no, we're fine. The market has come back a bit. We are only down 111 now. We were down more, considering the airline sector is down 12% today. And don't forget, tomorrow we get to hear from Delta and Northwest. They're reporting their earnings as well. So that's probably going to not bode well for the airlines for a while. But everything else is actually not doing so bad. It could have been a really horrific day. We could have sold off majorly. And talking to Teddy Weisberg earlier about this, you know what? We didn't have a ton of volume down here today, but there was a lot of volume elsewhere. Let's not forget that only about 35% of these stocks are traded here now. The ECNs do a lot of the trading now, and they had a lot of activity. So people are slowly coming back to market, slowly putting some money in, not sitting on their hands so much. It's definitely going to take more time, and they want to hear from these companies coming up. Tomorrow, of course, as Shibani mentioned, Amazon, Apple, big ones. Also, Boeing and Freeport-McMoRan, the copper producer, going to be two big ones that we're watching as well. So for now, we'll take this 100-point drop. At least we haven't given it all back. Back to you guys.
Tracy, thank you very much. And to Peter Schiff, we may have a little explanation beyond what the Fed guys said today, indicating that they may not be lowering as much, if at all, at next week's rate meeting. A European central bank policymaker who had been interpreted as suggesting that they might be raising rates is now saying that his last comments have been overinterpreted. So what various central banks do, whether it's our own Federal Reserve or European central banks, play on the price of gold.
Well, this is just short term. They're trying to talk up the dollar. The ECB is going to hike rates. There's no doubt about that. The Fed...
He says there is.
No, there's
European
not.
central banker says there is.
They said they're going to be tough on inflation. The dollar makes a new low, and they drag the guy out to try to save the dollar for another day. But the Fed has to not just stop lowering rates. Rates are much too low. They need to get aggressive and really start raising hundreds of basis points, but even that's not going to save the dollar. And, I want to say quickly about oil. I hear a lot of people talking about oil. They're saying, oh, no, this is speculative. It is not speculative. This is the real price for oil. Sure, there's no shortage of oil, but there's no glut of oil. The market is clearing. All the oil is being bought. This is the natural consequence of global inflation. Central bankers are printing money. Oil prices are going up. They're going a lot higher.
Jordan, I agree with Peter that central bankers, particularly here in the U.S., have just been printing money willy-nilly, and clearly I guess that the chickens are coming home to roost. And you've got a situation now where the markets are down, the dollar is down, oil is up, and people are wondering what's going to happen next, because the housing market isn't going to lift us up anymore.
Well, there's a lot to chew through, clearly. We've been through a very tough credit cycle, and that's going to have to wend its way through for some time. I think the positives are something seems to be, today's action, we are off the lows. The stock market seems to be discounting a lot of bad news. It's not getting wrecked on the worst news. We do have oil. I agree with everybody on alarming, or would seem to be alarming levels, but the action in the equity markets, we're right in the wheelhouse of earnings season, so we're going to bump along here. It may not be easy, but the action, the breadth, and the way the markets have been responding in current weeks is much better. We've not gone back and violated the January lows.
And Victoria, as we await Yahoo's earnings, it should be any moment now. You all want to hang in there. How much effect will Yahoo's earnings? We know it's going to affect the Microsoft deal, or at least affect shareholders, but how much will it affect all of NASDAQ, which is down greater than the Dow today?
Well, you've got to remember that Yahoo, at the end of the day, is a content and advertising company. That impacts Microsoft, which announces on Thursday, though in a very small way. And we already know Google's good news. So I don't see it as a real bellwether or, indicator for the NASDAQ.
Okay,
it's really about this deal.
Yoron, give me your thoughts quickly before we hear that closing bell ring.
Well, I don't think the Yahoo number matters. I think, Microsoft is going to stick to their number, and as we said, Yahoo shareholders would do good to accept that number. The real story today is still the dollar and oil. And if the dollar continues to sink, as Peter has been predicting, this economy is in real trouble.
All right. Well, the economy may be in trouble, but the market has come off its triple-digit losses, at least for the moment. As you hear the closing bell, the Dow Jones Industrial Average has recovered somewhat. It was down triple digits for most of the day. It may end up there. It's still settling as it turns 4 o'clock here in New York, but the trading day has come to a close. The business day, though, continues very busy after hours, and we've got a lot of financial news you need to know from Fox Business.